There was a time, for those of you who are, in the new generation might be watching this, you might not be familiar or know it, but there was a time when commercials were a thing. Even what were they called? Infomercials, those long ones, right? But my point is, the way things are nowadays, grateful for the technology we have, but the way things are, if we're not conscious and aware, it is actually increasing our desire for instant gratification. It's raising our time preference. What's going on, everyone? Welcome to another episode of the Success Spectrum podcast, where we dive deep into the world of finance, entrepreneurship, and personal development. I'm your host, Kadeem, and today we're going to start off by talking about something called time preference. You may have heard of this before, but I believe it was in the 1960s. There was a study done by a psychologist by the name of Walter Mitchell, and the study was called the marshmallow experiment. What they did was they took students, or rather children, they put them into a room and they put one marshmallow in front of each of them. And what they said is, you can go ahead and eat that marshmallow now, or if you wait 15 minutes and you don't eat it, when I come back, I'll give you a second one. And what they did then was they tracked throughout their life as the children grew up, became adults, well into their adulthood. They tracked certain stats about them, right? They tracked their lifestyle and health and so on. And what they realized is those who had the restraint, I'll say, and waited for that second marshmallow, the 15 minutes, without eating that first marshmallow, they had a lower body mass index. They had better academic achievements, and less of them from that group who waited for the second marshmallow, less of them were addicted to drugs. That first group who did want that instant gratification, who did eat the marshmallow, more of them were addicted to drugs, and so on. Now, what we're talking about is time preference, right? Gratification. Because those who waited for that second marshmallow, they're known as having a lower time preference. They were able to delay their gratification. Those who ate the marshmallow right away and couldn't wait because they wanted to taste that marshmallow, they have a high time preference and they chase or crave instant gratification, right? And I'm sure you can think of some scenarios for yourself or that you've heard of, or maybe you've seen, where instant gratification and chasing instant gratification has gotten somebody or yourself in trouble, right? Because it can lead to trouble. Think about it from a financial perspective. Some of you may have come across certain investment opportunities and it sounded so lucrative. So you decided to jump in. You gave the person your money, or you gave the money to the investor, or whatever the case may have been, and you lost the money because you were chasing instant gratification. You didn't understand how it worked, but it was an opportunity that was there. You may have been told it's a limited time opportunity. You gave the money because you wanted the instant gratification, then you lost it. When it comes to relationships, chasing that instant gratification, you got to put time into relationships. If you don't really build anything with somebody and spend that time building it with them, how do you expect to get whatever you might want to get out of the relationship, intimate or not? Right? You got to put in time building that relationship so that you can understand one another, your needs, your wants, your desires, whatever the case might be, depending on the nature of the relationship, right? Fitness and health. Chasing instant gratification in fitness and health, you're going to feed that craving for the donuts that you want. You're going to feed that craving for the candy, the chips, the pop, whatever junk food that you want. Because you're not going to delay the gratification and eat the salad, eat the salmon, eat the chicken breast or the steak or whatever it might be, right? Because you're chasing that instant gratification. You have a craving. You want to feed that craving right away. One of the things that I think highly contribute to this generation, if you will, or this generation and the one before, craving instant gratification is social media, of course, TikTok, right? Instagram, these other platforms. Because if we're constantly on there, we're seeing it look like everyone's making it look so easy. Everyone's making their success, or what looks like success online, seem so easy. You post one video, it goes viral. Here's how you do it. Everyone's making it look simple. And seeing all of these things, or being able to pull up the phone or the internet and instantly be able to get what we want to get, is allowing us to crave more instant gratification and lean into that versus the delayed gratification. Remember when commercials were a thing? Remember when we used to have to watch commercials? We couldn't just go on to something called Netflix, for example, and watch episode after episode after episode with no breaks in between. Remember when a commercial will come on, you might get up and you might go do something, or you might watch the commercial, or maybe something funny or whatever it is. You might take a bathroom break quickly and then come back for the episode. There was a time, for those of you who are, in the new generation might be watching this, you might not be familiar or know it, but there was a time when commercials were a thing. Even what were they called? Infomercials, those long ones, right? But my point is, the way things are nowadays, grateful for the technology we have, but the way things are, if we're not conscious and aware, it is actually increasing our desire for instant gratification. It's raising our time preference, because again, those who waited for that marshmallow, that second one, they are known as having a low time preference. They can delay the gratification. Those who ate that marshmallow right away, that first one, high time preference. They chase and crave instant gratification. And now, a word from our sponsor. If you want to learn to amass your wealth in stocks, bonds, real estate, in commodities, if you want to learn how to protect your wealth or transfer generationally down the line in the way that you want it to be transferred, this book right here is a must read for you. The Legacy of a Silver Spoon: Managing Wealth and Relationships by Al Compton. You must get yourself a copy because you need it. If you want to do anything that I just mentioned, without reading this book, you're not going to be able to do it in the way that you want to get it done. You might not even know that there's different types of trust or which type of trust you need. This book will help you in determining that. You might not even know what a stock is or what a bond is. This book will teach you every piece of information you need to know financially to get you from where you are to where you want to be. Go ahead and click that link in the description to get yourself a copy. All right. So when it comes to some tips and tricks, right? Let's call it. And before I even go there, let me clarify something. Entrepreneurs, for anybody who's an entrepreneur out there who craves to be an entrepreneur, I'm going to let you answer this. Do you think you can have a high time preference and be an entrepreneur, a successful entrepreneur, starting out, let's say? Maybe. Very difficult though, because if you have a high time preference and you go into entrepreneurship, you get paid on your results as an entrepreneur, right? So the work you put forward, you might have to work 5 months, 6 months, a year, 2 years, even longer sometimes before you really see any good results coming in or any tangible results. Before you see that pay come in or before you get a big contract, you're going to have to work. But coming from an employment perspective, we're used to working a week or two before we see the paycheck, right? That's more instant versus the entrepreneur side of it, where you're going to have to work and consistently work and work and work and work before you see that paycheck come in. I've heard it said this way: as a starting entrepreneur, this is how it goes. Work, 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 pay. Work, 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 pay. Right? And then you might get pay, work, work, pay. Eventually, work, pay, work, right? Depending on how you set things up. So remember, you might have to lower your time preference. This is an important point. As an entrepreneur or somebody stepping into entrepreneurship, lower that time preference and be willing to delay gratification. If rewards are there because of the work that you've done, you can take the reward. I'm not saying don't take the reward. I'm just saying accept and be understanding and remember that it's not employment. I'm not saying employment is bad, but you're not going to get the instant gratification you got from your workplace before. It's going to be different starting your entrepreneur journey. All right. When it comes to finances, I always tell my clients this: it's about time in the market, not timing the market. We're not talking about day trading, Forex, or anything like that, but each of those have their own strategies as well. But for the average person, it's time in the market. You've heard of compound interest before. Compound interest is something that happens over time. It doesn't happen overnight. So some people will invest whatever amount of money and they'll expect a 100% growth the next month. It doesn't work that way. It doesn't work that way. You got to be willing to put the money in, right? And wait a while, let's say, before you actually see that return. But the reason I say it's time in the market is because if you look at the index chart, right, the market chart for a 3-year, 5-year, 10, 15, 20-year period, you'll see that it's higher than it was before. The market is on a trend. Some years, yes, it'll be down, but then you'll see it rebound higher than it ever was before, right? And that's why we say it's time in the market, not timing the market. You try to time the market, you're going to lose money if you have no idea what you're doing. Even if you do know what you're doing to a degree, you probably lose some money here and there, right? If it were that simple and you could time it just like that, everybody would be wealthy. But it's not that simple. That's why we say it's time in the market. Dollar cost average, buy periodically. Market's up, market's down, you're still buying. And eventually that gives you a higher chance of getting better returns. Because now you're not trying to time the market, but you're letting time in the market do its work. Your money's going to compound for you over time. All right. So some strategies, some tips and tricks to help you lower your time preference, right? And increase your, not desire. I wouldn't say you desire delayed gratification, but increase your patience is what I'll say. And I think the marshmallow strategy, or rather the marshmallow experiment, is a perfect microcosm for this, because you can get what's in front of you right now. Instant gratification, high time preference. And it may be enough for you. It may not. Likely it won't be, depending on your goals. Or you can wait and get double, right? Get more. Because if you delay, and it sounds, I know some people don't even like hearing the word delay your rewards and so on. It sounds like something that's opposite of what you should be chasing and doing. But I'm telling you, it is more beneficial, clearly as illustrated in that marshmallow experiment. Yes, it was an experiment, but again, I think it's a microcosm. So tips. If you have, first of all, what do you want, right? What do you want? Let's say from a financial perspective, I'm just using that as an example. If you want to save for a house, you want to pay off debt, you want to save for some big purchase, whatever the case is, save for some big vacation, right? You can set up automatic transfers. And you've heard me discuss this before, but set up automatic transfers. If you want to save for that house, set up automatic transfers from your account that you don't even have to think about. That's going to put the right amount into this house fund, right? Or house account, that over time, you'll have enough in there. It's automated, so you don't even have to think about it, but you know, okay, in a year, I'll have enough because this much is going into my account and I don't even have to think about it. But I know in a year, I'm going to check that account. It's going to have what I need it to have. That helps you to practice patience. It helps you to delay gratification, right? Another thing you can do is challenge yourself. Challenge yourself to, let's say, not purchase non-essential items for a month, right? You do that, and again, you're practicing patience. But at the end of that month, you can go and get yourself whatever it is you wanted to get yourself. Reward yourself, if you will. But again, doing that or practicing that, it helps you to flex, or rather work that patience muscle. And eventually, of course, you'll be better at delaying gratification versus chasing that instant gratification. All right. And another thing you can do is start small. From a fitness perspective, if you're in the gym, I didn't say this earlier, but if you're in the gym and you have a high time preference, you're not going to be in the gym long. You're going to maybe work out 2, maybe 3 times a week for that first week. The next week, you're going to work out less, and the next week, even less, right? So within 3 weeks or 2 weeks, you might not even be at the gym anymore. Why? Because you're trying to work out and immediately reach your goal. You're probably, 1, going to burn yourself out. You're 2, going to think it's too difficult. And 3, why am I not there yet? Why have I not lost this weight, gained this muscle mass? Whatever goal you have in the gym, why have I not reached it yet? It's been 2 weeks, Yeah, you're right. It's only been 2 weeks. What do you mean you should have that goal already? You're trying to work off years potentially of poor eating habits and poor health habits. It's going to take time. Lower that time preference. Be willing to put in the work as you wait for that gratification to come. And that's why you hear sometimes people will say fall in love with the process, because it's not about achieving that immediate gratification, that immediate result. It's about doing the process that will lead to this result, because it's not going to happen overnight, right? Instant gratification, high time preference. It's not going to happen right away. You got to put in the work. You got to eat that salad. You got to eat that salmon. You got whatever, the steak, right? Whatever it is for you, but you have to be able to and willing to delay gratification, because again, I think I've said it already in this episode, but as an entrepreneur, you better lower that time preference. Because again, if you don't lower that time preference as an entrepreneur, you might even do something shady. You might, maybe try ripping off clients or whatever the case is. But at the end of the day, that's only doing harm for you. That's only harming yourself, because now that client will eventually realize you ripped them off, or they may take that service then, but they're not going to come back to you. Instead, what you could do is increase your service levels, right? Work on your skills, on your craft, invest in yourself so you can get better at certain things, and then give your client the service that you can provide from a good place, obviously being genuine, but give your client the service that you can. Maybe your service is your USP, your unique selling proposition. And now, because you offer such great service, I'm going to come back to you because your price is worth it. You gave me service that nobody else did. And you're not chasing the dollar now, that instant gratification. You're actually chasing the service. You're giving me what I need from a service perspective. And from that angle, the dollars will come anyway. But now you're chasing the happy client with the proper service versus the dollar. Right? You're delaying your gratification, putting service above the dollar, knowing that the dollar will eventually come. All right. So hopefully that was helpful for you. Quick episode today. Kadeem here, and I'll see you on the next one.